Good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where each morning we take a quick half hour to review market open in Asia and reflect on the direction of travel through the day. Let's kick off deep in Asia, I think. Sydney is Asia, right? Even though they sell fish and chips, it's still Asia. Peter McGuire, CEO of XM Energy, or XM Australia. Peter, welcome. It seems the markets have taken off again, the equity side at least.
Absolutely. And good morning, Sean. Good morning, other panelists. Yes, greetings from Sydney. Yeah, Aussie's up 1.5%, Sean, though New Zealand was off 0.4. So how do you work that one out? But yes, across the general theme across Asia today has been one of green lights, and Taiwan really shot the lights out with about 2.25%. So that momentum build, let's see where actually, the rest of the day plays out as far as Europe, what happens in New York this evening. Commodities were also bid up. We've got gold back at that 1860 number, but crude very, very strong, 57 for Brent and about 54 odd for WTI. So they've had a nice lift, Sean, also for a Monday.
What's the view from Asia, Peter, on the shenanigans we've seen on the US equity markets with the sort of day traders fighting the hedge funds or whatever it's going on exactly?
Yeah, I mean that's an interesting to put it mildly. I'm sure Mike would be able to lend far more expertise. One, that he's in the States, and secondly from Bloomberg. But the first part is they seem to be, the retail traders are banding together through technology, and the old story, social media binding people together. The storyline was the shorts were going to get squeezed, so they looked at GameStop, and that was, the rest has been history. It's been ramped up, and now
where is the vulnerability in the sort of structure of the market that allows this to happen from the point of view of your interpretation?
My understanding is that they're targeting companies. I don't know whether GameStop was that was the first one, and the name was there was something more to the meaning of the name, Sean. I don't know on that one. I haven't heard that sprouted, but possibly there's something in that.
It's hard to know.
They were naked. Sorry, they were naked shorts, and there were short positions as far as short sellers, hedge funds off it. So naturally, they saw that as an opportunity to band together, drive the price up, a short squeeze, as we all understand, and option strategies. And by the sounds of it, it's still got a couple of months to play out yet. So let's just see where it all rolls.
Peter, the forecast that China oil demand in Q1 could be less than Q4. It'll be the first quarter-on-quarter decline of Chinese oil demand since the COVID pandemic started. I would think, including myself, trying to read the tea leaves on the scale of China's disruption by this COVID resurgence. It seems somewhat minor, but yet the reaction can be quite profound, as in other places, lockdowns over small numbers of infections. What does it look like from your perspective? How significant is this adjustment to China's oil demand in Q1 into Q2?
Well, we've taken on board also, Sean, that Lunar New Year. So you roll that in there, and it's enough of a headline. Also building on that, of course, is the corona numbers. So Saudi's impact from a supply side, yeah, there's possibly weakness there. We've just got to get through February to get a true indication as far as the severity of COVID and what impact it's going to have to domestic travel internally in China over that 2-week period. So
I mean, while they're saying 40% of travel is down on 2019, yep, that's still a few 100 million people that are traveling. And yes, I suppose the potential for COVID infections to travel with them is what we're seeing all over the world.
Well, that's exactly right. And that's the issue that I think has got to play out into the March and April side. So, yeah, reinfection rates and, vaccines. It's just, hold on and hang on. I'm not sure what impact it has as far as price. Took on board Mike's comments. Yeah, maybe we're getting to a point that it's toppy. 60, this time, I think in December and certainly early part of January with you, Sean, we were saying, what's that headline number going to be? Is 60 going to be the break point? So we're a little bit shy of it at the moment, but it's going to take a big push to get above it. And I'm not sure whether this environment's going to be the recipe to get us there.
Peter, the other aspect to this, if you like, one of the other pillars, I don't know, it's sometimes a big pillar, sometimes a smaller one, is the weaker dollar. We've seen the dollar have some recovery in recent trading days. Your thoughts on the outlook for the dollar strength and its consequence or bearing on Asian energy demand?
Well, Sean, we're at 91 on that US dollar index. So it's bounced very strongly for over the last 2 weeks from that 89.2 handle. Now, possibly a 91.5. It's a hard one to really put a lot of faith in, but I think from the first part, what's happening as far as Eurozone. So I'm looking at that closely this week. The next part, of course, is the overall fabric of Europe. Corona. So maybe
on that point of the currencies, do you think the other decision that's coming this week, I believe, is will the British central bank move into negative interest rate territory?
Well, I think that's, again, we had our meeting today and we've got the UK meeting. We've only got 2 central banks meeting this week. Aussie was the first one off the blocks. We've got the UK. I don't know whether they go down that pathway, Sean. I'm still, it's a 50-50 bet as far as I'm concerned. So if they do go down there, then that opens up a different can of worms. And if they don't, so I think that pound, it's got the capacity to take a 137.5, 138 handle in the short run. So yeah, I'm keeping an eye on it. That could be a good trade, the old cable.
Well, you'd have to say that they've certainly shown a lot of discipline, and maybe more than one would have anticipated in previous cycles when they've attempted to coordinate. I mean, nothing has ever happened like this before, but previous cut agreements always had greater slippage than I think we're seeing now. So I wouldn't bet too much against their ability to maintain discipline, given it's a sort of existential survival when you need $55 a barrel to pay your bills. Peter, your thoughts and outlook for the rest of the week? Of course, as we've talked, China is looking on it. It's going on its holidays. That's one big issue in Asia. Anything else there?
I want to see if that groundswell continues, what we experienced today as far as equities. Do we see that roll across for the rest of the week, Sean? Or is there a little bit of a profit taking by Thursday? I take on board Mike's thoughts as far as gold. Yeah, I'm certainly a bull there. So I think there's a good kick along that, 1900 handle sometime in February is achievable. What's happening as far as that US dollar index? So they're the ones that I just want to keep an eye on. Eurozone, and of course, the UK as far as the central bank.
Would the expectation be, Peter, that if the US does go through with this extra stimulus package, whether it's $1 trillion, $2 trillion, I mean, it's just crazy big numbers, that the dollar weakness trend then continues, returns?
It might. It may well, be an 89.8, 89.7 handle. You might see a quick, washout. It's probably going to be very good for as far as equities. They'll get another little bit of a leg up. But I wouldn't be surprised that you see a little bit of softness in that US dollar, Sean. I still don't know if we're going to be under an 89 handle anytime soon. I think that really is the bottom level of the range. But hey, been wrong plenty of times. It would seem
to me that something would need to give, right? Because we can't have continued strength on the dollar and increasing oil price at the same time. The burden on consuming countries would then become too great to sustain that paradigm. Your thoughts on that, Peter?
Oh, exactly right, Sean. And that's the issue. Look, if there's a wild card and it gets presented to the market, I'm not sure what that is. But if there is always something happens out of left field, and we've all been around for long enough to know that it happens. So let's just see if something happens in February that really takes us all by surprise. I don't know what it is, but if it does, then that could be the catalyst.
Interest rates going up.
Come on,
that
Sean,
old
come on. We're going down to negative, brother.
Hey, man.
We're all heading
You know,
negative.
I wouldn't have thought I'd see things happen that we've seen happen in the last few months. Who knows? But that's obviously ridiculous. That's not happening. Well, that's a wrap for today. Listen, thank you so much, Amina, for joining us today. Peter and Mike, as always, in from New York. Peter from Sydney. Around the world in half an hour is always a bit of fun. Really appreciate your insights, and thank you, everybody, for logging in. Thanks, everybody. Have a good day. All the best.
Thank you.
Thank you.